Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, August 30th. Hope you guys having a great day so far. Hope you guys got some great plans for Labor Day weekend. Speaking of such, we won't be back obviously until September 3rd, the Tuesday. So that would be since we got a federal holiday on Monday, yeah, and both markets will be closed. So let's jump ahead. We do got a bit of economic news to go over today. We'll start off with the personal income for the month of July. So in June, we had a 0.5% increase a month over month. And for a forecasters calling 0.3%, it came in much lower at 0.1% from June to July uh, increase in personal income. However, on the other side of things, so people are making money and now we're spending money, we see consumer spending. And in June, from May to June, it was a 0.3% increase. Forecast from June to July was 0.6% and came in at forecast at 0.6%. So people are spending more than what their increase of income is. Then we get into important data here. We got the personal consumption expenditure, the PCE. This is the Fed's favorite gauge for inflation. So it's actually the core inflation, what they look at when they strip out food and energy. So we'll jump into that one second. But uh, starting with personal consumption expenditure, we had a 1.1% increase month over month from May to June. June to July, forecast is calling for a 0.3% increase and an only increase up to 0.2%. So it's year over year basically went from 1.3, well, get this, it was actually revised lower from 1.4 in June, an increase to 1.4. So essentially, from the initial reading of 1.4, it remained unchanged, but they did a revision for July, so technically it went down 0.1% and went and rose in June, but it went up again back to its original state that we to the initial reading here. Now, when you get the core inflation, again, we take out food and energy. This is what the Fed really looks at in terms of their inflation data, and their target is 2% year over year. So, from May to June, we had a 0.2% increase. For forecast calling for July was from June to July was 0.2%, and it came in expectation. Excuse me. Now, its year over year remained unchanged. It remained at 1.6%, so it stayed the same there. So let's take a look here at the next page. We got quite a bit of data here today. We got Chicago PMI. This is manufacturing in the Chicago region, and in July it contracted. So anything below 50 is considered contraction. It went way down to 44.4. However, it rebounded a little bit in August here to 50.4. So just barely above contraction into a little bit of expansion here in the Chicago region. So that's a good sign there. I believe this was down actually 2 months. It was actually contracted in June, and then June and July were in contraction period. Now it looks like it just barely got above that. So we'll continue to watch that, see if it improves at all in the future here. Now, consumer sentiment, the initial reading was at 92.1 for August. We do get a couple reports on consumer sentiment. It's a survey done by the University of Michigan. So it's 92.1%. Forecasts are calling for a slight increase to 92.3. However, it did dip down to 89.9. Now, for July's period, it was at 98.4. So it had a pretty big drop from 98.4 in July to end of July to 89.9 for August. So people are feeling a little less, a bit less optimistic about things. Probably because the whole thing with China, with trade wars and everything, we're getting a lot of election stuff coming on with the Democratic primaries and everything. So maybe that people were hearing a little bit of too much news and weren't feeling as well about things. So let's jump ahead here. Sorry about that. Headline news: stocks are up. We don't have anything new on the geopolitical. The sentiment is basically positive right now, primarily because we've got a lot of reports coming out from between the U.S. and China. Things are feeling a little bit more optimistic. China, a couple of days ago, said that they weren't going to raise rates or raise tariffs immediately, regards to our retaliation last week. But they did say that they were kind of welcoming to come back to the tables. President Trump basically said that they're going. There's reports that they're going to try meeting next face to face next month. Effective speeches or effective communication between the two has been reports. So things seem to be settling down a little less tepid, a little more tepid. A little more tepid in terms of the inflammatory comments we were seeing earlier in the month. So things are easing up a little bit. Investors are appreciative of that. So let's kind of jump ahead here to the bond market. Bond market, we started the morning lower, but now we're up against the ceiling of ceiling here. Resistance, we're up about 6 basis points, so it's not going to be enough for obviously a price improvement. But as you can see here, the 25-day moving average passed up above this Fibonacci. So this level here we're going is going to shrink a little bit until it reaches up to the next Fibonacci, and it's going to squeeze it. So it's going to force it to go one direction or the other direction. And of course, as we've been saying for a long term, this is going to probably go upwards. At some point, it could come down for a little bit and then rise back up. It's kind of like when you get a trend going, sometimes it doesn't go in a straight line. It's kind of like you're watching a little boy playing with a yo-yo and walking up a ramp. So you're going to have your ups and downs, but long term it's going upwards. And that's kind of like the best picture I can kind of present to you for that. But right now it's at up 6 basis points. Mortgage rates remain unchanged. Right now, 10-year Treasury, we're up about 1 point. So we're at about 1.51 on the U.S. yield. It did break above yesterday. It did break above the Fibonacci level here, which was a floor of support after breaking just below it, which became a ceiling. It wasn't a solid break, so that's why I was able to come back up. And right now, again, it's kind of staying around the 1.51 range. All right, so that's pretty much a wrap. If you guys are looking to refinance or buy, please give me a shout out, direct message me or DM me. It's the best way to reach me. I'm a loan officer, and the company I work with, CMG Financial. We service all 50 states, so we can help you no matter what state you're located in. We service all loans, provide all loans from jumbo, conventional, FHA, VA, USDA. We offer loans that many lenders do not offer, like loans specifically for real estate investors. We've got the bank statement loans for self-employed borrowers. People with W-2 wages can also qualify for us, but this has been more applicable more for the self-employed borrowers for national loans. And we got a couple loans programs that only CMG offers. So that is the all-in-one loan. That's a great loan program for people who have good cash flow, don't live paycheck to paycheck, want to pay off the mortgage much quicker, and without having to change their lifestyle, and have more control over the loan, and then save out. In my case, I'm looking at hundreds of thousands of dollars in interest payments. Now, the Home Funded program is a great down payment program, great for those who are, not only just for first-time home buyers, as a lot of down payments are for, but can be great for people who are displaced from the homes, from the natural disasters of hurricanes, from tornadoes to earthquakes to wildfires and stuff like that, and now need help to find another home. Also, it can be great for those who are getting married, a wedding, and use it as a wedding registry. So if you want information on either one of those, feel free to reach out to me, and I will get you that information. You guys have a great rest of your day, and enjoy your long weekend here, and we'll see you guys on Tuesday. Thanks for watching. Bye-bye.